Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I have a special guest. His name is Mr. Steve St. Angelo. Steve started to invest in precious metals back in 2002. Later in 2008, he began researching areas of the gold and silver markets that, curiously, the majority of the precious metal analyst community has left unexplored. These areas include how energy and the falling EROI, that's energy returned on invested, stand to impact the mining industry, precious metals, paper assets, and the overall economy. You can find many of Steve's articles on noteworthy sites such as Silver Doctors, TF Metals Report, Future Money Trends, WealthWire, and Zero Hedge. Currently, he can be found at srsroccoreport.com, and that link is in the description of this YouTube video. Thank you, Steve, for joining me today on Looking at the Markets.
Yeah, Dave, there's a lot of things happening in the markets. It looks like the volatility, the insanity is increasing almost exponentially now, and so there's a lot to talk about. I'm glad to be here.
There is a lot to talk about, and thank you for joining me. I appreciate it. So let's start at the beginning. How did you first get involved in finance, and specifically in the precious metals markets?
Well, David, that first goes to the way my brain works. I'm not really a highly intelligent person. I didn't, go get PhDs. But the way my brain works is I'm extremely inquisitive. I have a very high curiosity, and so anytime I go into a different field or work with a different company, I'm always trying to learn as much as I can. I like to get to the root of the problem. The root of the problem is where the solutions are, or where that's where you find your answers, or you understand what's really happening. And so I started realizing there was things wrong with the economy after the tech bubble in 1999. So I started investing in silver in 2002. I believe I bought my first ounce for $4.52, and that was after reading Ted Butler. And basically Ted Butler was writing analysis that at some point in time in the future, because of industrial demand as well as investment demand, we would see a huge spike in demand, just like what happened with rhodium, where the price of rhodium went to, I think it was $10,000 briefly. And so I started looking at silver back then and investing it for those reasons. But as my research and education of the precious metals as a store of value, and then in 2008 with energy, in which energy is a key to our markets, I begin to look more at why gold and silver will be the go-to assets because of this high-quality store of value. And ever since then, I've been learning more and more about our economy, our markets, and the mining industry, and which is the reason why I continue to favor the precious metals over most other assets such as stocks, bonds, and real estate.
Sure. Now, here's a little bit of a personal question, if I may. Are you a stacker of precious metals yourself? And do you have tips or recommendations for aspiring bullion collectors?
Yes, I do believe in purchasing precious metals. I tend to purchase them, on lower prices. I have purchased a lot of my precious metals earlier on, but I do believe it is important to have the majority of your assets in physical assets like precious metals, because the markets today are highly leveraged upon debt, and so if you look at all the assets in the world and you minus out the debts, a financial 101 means that's your net worth. Well, if you look at all the assets and you minus the debts, there's not much left. And so when the markets crack, it's going to be important for people to be in precious metals. And right now the sentiment is very low. We see sales of precious metals in the West, the United States, really fall off since last year. But I do believe it's important for to understand more about owning physical gold and silver. And I would advise people to educate themselves, try to find a good dealer, the one that has very low commissions, the ones that tend to advertise a lot. They take advantage of people, so I would recommend people not you could call anybody up, but when you start talking with some of these highly advertised TV precious metal dealers, a lot of them are putting people into very high commission rare coins, which you're paying a 20-30% premium commission on that. You don't need to pay that. So that is one of the biggest tips that I would say. Try to find, if you're going to purchase precious metals, purchase them with the lowest commissions over spot, and that includes the premium too. So that's the advice I would give.
Yeah, and that's great advice. Now, wanted to get to some other topics. In a couple of recent interviews with Cliff High and Daniel Amaduri, I've been told in no uncertain terms that the US dollar will be worthless within our lifetime. Do you agree with this?
Yeah, I've actually done interviews with Dan at Future Money Trends, as well as his associate Kenneth at Crusher Street, and I do respect what Cliff has to say. He's very intelligent. He's, been in the software engineering industry, and the U.S. dollar will become worthless because let's just take an example. The $100 bill costs 14 cents to make. So let's say you're going to make 1,300 bills. You're going to print 1,300 $100 bills. That's something like $1.60 for $1,300.
Yeah.
Now, to get an ounce of gold, which is about $1,300, it cost $1,100 to produce that ounce of gold. So we can clearly see the $100 bill that is no longer backed by gold. It's backed by debt, U.S. debt, which is now almost $20 trillion. That the U.S. dollar has already lost a lot of its value. The problem is when the dollar actually loses all confidence, and then that's when we're going to see the value of the precious metals really rise. And so I do agree. I do differ with Cliff on certain aspects. He does understand the falling energy return on investment, but he has this understanding that technology, whether it could be alien technology or new technologies, are going to pull us out of the doldrums. I differ with him on that. That's just where I differ. I don't. When Rome had a lot of technology and then it collapsed, the ancient Roman Empire, it didn't come back. That area, that region, didn't come back until 1,000 years later, and until the Renaissance in the 1400s. So I look at what's going to happen to the U.S. empire as well as the global economy is similar to what happened to Rome. We're just going to collapse from a complex system to a much more less complex, simple system, and that's to be more local. And when you have that, gold and silver will be the assets to own at that time.
Yeah. People are going to want to hold on to something physical, I can imagine, if that scenario plays out. Now, getting back to silver as a means of investing in silver, is it a good idea to invest in mining companies such as Hecla Mining, First Majestic Silver, as opposed to owning the silver itself?
That's an excellent question. A lot of people, I know, I'm in touch with a lot of investors. They correspond with me, and many of them have placed their bets, like they went to the lottery or the Vegas casino, and they placed their bets a lot on the mining industry. Now, I'm not saying there's anything wrong with that, but there's a lot more risk with a mining company.
Sure.
But there's a lot more upside potential with a mining company too. Because let's say when the markets start to crack and people want to get physical, there's not a lot of physical there to get. So it's going to be hard to acquire it. However, the funds that want to actually get into the gold and silver market can get into the miners. And you see, the miners they're not hampered or capped by how much gold and silver is in the market.
Right.
Their stock price can continue to go up. Now, let me say something about investing in the mining industry. Here are some tips that I would recommend. I don't get any. I'm not associated with any mining companies,
right.
And so I do this all based upon independent analysis. I would suggest, even though all mining stocks could go up when the markets crack, even the penny stocks, I would suggest the best stocks to own, if you're going to own mining stocks, are the actual producers. not the explorers or the juniors. If you're going to own the juniors, have a small percentage of your mining investment in juniors, but most of it should be in the producers. And even that amount, a percentage of your, if you're going to be in physical, if you're going to be in precious metals, you should have, I would say, more of your assets in physical. That's like the insurance. The miners are, let's say, an upside investment, but there's risk there. Now, let me give you an example of the problem with the mining industry. The mining industry is in a way, it is complex, and it is kind of disinforming the public. For example, I like Hecla. It's one of the few silver mines in the United States. But they come out and they say that their cash cost this last quarter was 84 cents a share, 84 cents an ounce. So you think, wow, the price of silver that quarter was like $17. So they're making all this money. Now, the cash costs they deduct their byproduct revenue. And what is that? That's their other metal production besides silver. It's gold, copper, lead, and zinc. Now, looking at Hecla's actual revenues, only 36% was from silver. So 64% was from gold, copper, lead, and zinc. So when you actually deduct that from your costs, it allows you to have a very artificially low cash cost. And so, but their profit margin actually was about 6% when you look at their adjusted income. They made about 6% profit in the first quarter. So really, their real cost of production is about $16. It's between 16 and let's say about $16. So they have a very low cash cost. It doesn't mean that they're making all that money. And I just want investors to understand, and I'm going to write a report on this to actually show what it costs to produce silver, the real cost to produce silver. So if you're going to look at a miner, you shouldn't go by the cash cost, because actually two mining companies could make the same profit, but one has a much higher byproduct revenue. Just like Hecla, they actually produce a lot more gold, silver, lead, and zinc than they do silver, as in revenue, compared to, let's say, First Majestic, which is another company that is profitable, but they have a much higher silver revenue and much less. So they're going to actually have a higher cash cost, but they're making about the same amount of money. So you shouldn't go by cash cost. Cash cost accounting is bogus, as well as the all-in sustaining cost, because that is also based upon deducting their byproduct credits. So I just wanted to add that information, because a lot of people who are new to the market are taken by some of this rhetoric that we have a very low cash cost. And that doesn't mean anything. You have to look at the profitability of the company and how much reserves they have for the future.
Sure. Makes sense. And great advice there. All right, I wanted to talk about SRSRoccoReport.com. Link is in the description of the video. What services are currently being offered at SRS Rocco Report?
David, I started the site in 2013, and many people told me I should start a subscription service. However, I initially were going to do that, but then I found out that the information was very important that the public needed to understand. So I did not do a subscription service. So all the articles I put out are free to the public. But now I have a few reports that I have written. One's called the Silver Chart Report, and the other's called the Gold Investment Flows. And those are very modest price reports, but you'll find information in those reports you won't find anywhere else.
Right.
I am in the process of writing a couple more reports, and but that is what I provide on the website. I provide information. I try to put out information, David, on energy, the precious metals, the mining industry, and how everything relates to the economy in a way that is much different than most other analysts. And I think if you look at the work at the SRS Rock Report, you realize that it's the energy. The energy is the key. You don't have an economy. You don't have a housing market. You don't have an automobile industry. You don't have a tech industry. You can't go out to a restaurant. So all those, you see, people think that, a lot of people think that the energy sector is like the healthcare sector or like the automobile industry. No, the energy sector isn't a sector. The energy sector is the industry that underlines the whole system. And so if there's big trouble with the energy sector, trouble with the whole economy. And that's what we're seeing now, and that's what I'm writing about on the SRS Report site.
Yeah, that's great. And people need to check that out. I think it's great that you have free content as well as some premium content that's very affordable and that people have access to. I think that's fantastic. So srsrockoreport.com, people need to check that out. Now here's a tough question, or is it? Let's see. Hypothetically speaking, if your grandparents told you they were going to invest 60% of their life savings in SPY, the S&P 500, and the other 40% in TLT, the bond ETF, what would you say to them?
That's a tough question, because you see, the market is being propped up by the Fed, and I'm going to write another article based upon this excellent work by this previous fund manager. And the problem is, the market used to be more of an active investor, active manager. Now they're more passive, because the reason why they have to be passive is the Fed and central banks are propping up the market. So here's the sentence that we all know now is you don't fight the Fed.
Right.
And we have seen, according to the Zero Hedge article in the data, the central banks have purchased 1.5 trillion of assets in the first 5 months of 2017. 1.5 trillion. Now, that is more than the average year for the past 6-7 years. They've actually purchased more in first 5 months than they purchased in a year for the past 7 years, 6-7 years. So they have doubled the asset purchases. Now, they just didn't do that because they felt like it, because they were getting a good deal.
Right.
That's a sign that something's wrong. And now we need like more money printing, or drug addict needs more drug, or the hangover starts. And so, because people are retired, or now they're in the retirement age, it is tough to deal with that, because it's hard to give an estimate of what is going to happen over the next several years. We could continue seeing the same insanity where the markets continue higher. So being in those assets might not be a horrible thing to do. But unfortunately, I would say this: if you want to be in those assets, you see, that's not diversified. Being stock funds and real estate is not diversified, because there's no insurance like gold and silver.
Right, right. And so all this adds up to people really need to consider precious metals as a part of their portfolio. If they're not considering that, I think people are putting themselves at risk way too much. Wanted to talk about cryptocurrencies, if that's okay, because that's such a hot topic right now. I get questions all the time about Bitcoin, Ethereum, and so on. Are you bullish on the cryptos right now?
You know, I think in one of these reports I'm putting together, I actually have come across a couple of the techie guys, and I've got a pretty good idea what it costs to produce Bitcoin. The actual cost. It's staggering, the energy that it takes to produce a Bitcoin of energy. Total energy in a year is phenomenal. It really is.
Yeah.
And so when you add up all the costs, people have no idea that it's very expensive to produce a Bitcoin. Now, is the price the same as the market price of Bitcoin is right now, which is like $2,500? No, but it isn't like $500 either. Right. So when we understand that it takes a lot of energy to produce and capital to produce a Bitcoin, it does have some sort of store value properties. It does, because of it costs a lot of money to produce the Bitcoin. And so I do think this sign of what's happened to the crypto market since, let's say, March, April this year, they really spiked.
Yep.
I think it's an indicator. It's a Ponzi scheme. It's a bubble. I don't think it is. I don't think it's a bubble, because they've been saying that about Bitcoin for the last 5 years, and it continues to move higher. I do think it's an indicator that something is wrong in the market, and now people are looking at alternative places to put their money. And so we have to realize the one thing about the cryptocurrencies like Ethereum or a Bitcoin or et cetera, even though they may be speculative right now, maybe their values are a little bit lofty right now, they don't have any debt behind them. They don't have 20 trillion of debt behind the U.S. dollar. So a cryptocurrency, all the negative things we can say about them, they don't have any debt behind them. So that's kind of a positive thing. So I'm looking more into the cryptocurrency market. I do think I have my opinion on the matter is we're probably going to see a lot more funds moving into the cryptocurrency market over the next several years. So I do think if you have a little bit of money and you want to throw into the cryptocurrency market, I don't think it's a bad idea. If you're going to throw a lot of your money in there, I don't know if that's wise.
Right. I totally agree. And finally, I have a feeling I know the answer that you're going to tell me, but do you believe that everybody should have gold or silver in their portfolios? And since the precious metals seem to be having a nice dip today, is this as good a time as any to get in?
Yes, David, and the reason why I believe that, and we didn't really touch into it, and it's a focus on the energy. If you don't understand the energy, you should own the precious metals. Because there's a question is, well, if the Fed and central banks have been manipulating the precious metals in the markets for a long time, many people say, well, why can't they continue doing it for another 10, 15, 20 years? That's a good question.
Yeah.
Well, the reason why they won't be able to is the energy. The energy system is gutting. The U.S. and global oil industry is being gutted. And I provide a lot of articles and data showing why that's happening. One important factor. The U.S., the global oil and gas industry their debt is $3 trillion, up from $1 trillion just 10 years ago. So now their debt now has ballooned, and they have to pay an interest expense on all that debt that they have. So, and with the low price of oil, it's gutting the whole system, the whole oil and gas industry. Even though we have a glut of oil, it's kind of like what I call the going out of business sale. Now, when you understand that, David, when you understand that the energy industry that supports everything is being gutted, you don't want to be in stocks, bonds, and real estate.
Yeah.
Because those assets are basically energy IOUs. They get their value for burning energy in the future. So I do recommend, like Jim Rickard says, people should have like a 10% insurance in gold and silver.
Sure.
I don't agree with that. If we know the stocks, bonds, and real estate are going to fall in value, and I just had an interview with Chris Martinson where I say we're probably going to see 50 to 75% declines in these asset prices over the next 5-10 years. Why would you want to put 90% of your money in those?
Yeah.
And only 10% in gold and silver. So it's up to the investor to educate themselves and to get into precious metals. But I do believe people are not invested enough in them.
Yeah. I actually happen to agree with that. And it's very rare that I'll get to speak with somebody who's more bullish on precious metals than, and especially gold, than Jim Rickards. So it's very interesting. And 50 to 75% decline is what you expect. Yeah, I actually read your article on that, and that's a little scary. But I think we all need a good scare. I think there's too much complacency out there, and I'm assuming you would agree with that. That the complacency level right now is just super high. So it's time for a wake-up call.
Let me interject. I'm sorry, David.
Yeah.
In my most recent article I published this morning, there's a great analyst at Deutsche Bank that actually put that complacency index on a chart, and it's stunning. And basically, he says the market's broke in 2012, even though we know the financial industry died in 2008. But the market's broke in 2012, and ironically, that's the same year that the price of gold peaked. Even though its high was in September 2011, its average annual price was even higher in 2012. It peaked then. So you see, the reason why I'm more bullish than Jim Rickards is because I understand the energy and the falling energy return on investment. Jim Rickards, Peter Schiff, Jim Sinclair, all the big gold guys, They're very smart, and I respect what they do about precious metals, but they don't understand the energy. If you understand the energy, you have to be more bullish on gold and silver, because they have been the store of value for 2,000 years. And so that's the reason why I'm much more bullish on the metals than these analysts.
Fascinating. Wow. How can people contact you for more information, both on social media and elsewhere?
Well, if you go to my website, SRS Rocket Report, at the bottom of each article, you can click on and either follow my Facebook page, my Twitter page, or my Google Plus page, and I keep all my followers on all those different social media. I don't spend a lot of time, because you could spend your whole life on those social networks, but I do link my articles to there, and sometimes I will make a reply. But you can find my work at the SRS Rocket Report. I put 2 or 3 articles out a week, or to be putting out some more excellent reports that explain how things are going to unfold. And folks, lastly, if you think investing in precious metals is all you need to do, that's not a wise thing, because we're going to see the disintegration of the energy industry, which means a disintegration of the just-in-time inventory system. So things are going to change quickly in this very highly leveraged technical system of ours. It's going to simplify very fast, and when it simplifies very fast, we're going to lose a lot of services. We're going to lose a lot of things we're used to. So life is going to become a little bit harder. So people need to learn more how to deal with actually surviving on more of their own merits. And so that's something I think that is important. I don't focus on that. There's other websites that do that, but I do think that's another important. People need to learn more how to grow food, how to become more self-sufficient. It's not totally, but more. And I think that's important, David.
Yeah. A big wake-up call for me and for everybody. SRSRoccoReport.com. I'm going to be tweeting out those reports for you. Even if you're not the big social media guy, I can be your I can be your announcer for that on Twitter and Facebook. I'll be more than happy to do that, because people need to check out these reports and learn about the energy, as you say, that's involved in all this. Mr. Steve St. Angelo, thank you so much for joining me today. I really appreciate it.
David, thanks for your time, and maybe at some point in the future we can do another interview to see how things have been changing, because that's the one thing I like to do on my site, put out the information to show how things are, how the data is changing and how things are unfolding.
Will do. Thank you, sir.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.